Let's go live to the trading desk right now. I've got Victor Adair on the line, and I bet, boy, Victor, it has just been so busy. I mean, there's just so many markets that are making significant moves that I don't even know where you start.
Well, let's start with crude oil. Last week on the show, I said, and I quoted the Jack Nicholson movie, "As Good as It Gets." The agreement that was made by the non-OPEC producers Saturday of last week to cut back, say, 600,000 barrels a day seemed to me to be not only the cherry on top of the cake, but just truly as good as it gets. We saw the crude oil market open $3 higher on Sunday afternoon, and then from there fell about $5. Our view has been that the supply-demand inventory story on crude oil is bearish. But throughout this year, and we have rallied from $26 up to 52. We have seen throughout this year huge bottom picking in the crude oil market. I think if the price of crude oil rolls over some, which I think it will, we'll see a lot of these people become sellers. The crude oil story feeds into the Canadian dollar story, obviously. Mike, you want to go there?
Yeah, I absolutely do.
Okay, so the past couple of weeks we've seen, let's say, Canadian dollar hit an 8-month low back in the middle of November. It rallied a couple of cents as crude oil worked higher. We have been bearish on Canada. We've got a number of reasons there, but just to get to the point, we're bearish on Canada. We've used that rally to add to our positions. We had about a 2-cent break here following the Fed in Canadian dollar. The third market is gold. We have either been short or aside the gold market since the highs it made just following Brexit. This week, we covered the last of our short positions in gold. We now have no position in gold.
Let's come to that U.S. dollar again, because that's still one of the keynotes there.
Sure.
And that's, what, a 14-year high in the U.S. dollar, in a dollar index?
The U.S. dollar index, Mike, a 14-year high, and on the other side of that, no surprise, the euro currency hit a 14-year low this week. Really, the narrative, to use that new term, is about the widening interest rate spreads. I mean, for crying out loud, American 2-year treasuries yield 2% more than German treasuries. It's hard to pass that up in the currency markets. But the bigger picture, and this is what I've been talking about since 2011, money comes to America for safety and opportunity. That is not going to change. I think we clearly remain long-term U.S. dollar bulls.
Okay, so we're going to the new year. At this time of year, Vic, do you just sort of back off because we're coming to a year end? Volumes will dry up at least in a few of the days, et cetera, and you sort of look at what the year end closes are going to be? The whole liquidity gets out of the market. My son Drew's going to Mexico for a week, so I'm short-handed. No, we've got good-sized positions on in crude and Canadian dollar, and we have some what I call some bets. That some of the market moves have gone too far too fast in currencies, interest rates, and in the stock market. But no, not necessarily. I am sensitive that the volatility can get a little choppy, but for us, volatility just equals opportunity. Well, we'll be here to chronicle it. I guess in the meantime, Victor, you get next weekend off, and I won't, I hope I talk to you personally, but I won't talk to you on the air again till the new year because we get those 2 Saturdays off. Enjoy it. I think that's the equivalent of Halley's Comet.
Thanks, Mike. Best wishes to you and your family for a Merry Christmas.